Good Saturday morning to you, everybody, and welcome to Mortgage Matters Radio Show with Rob Weinberg. I'm Gary Byron. You are listening to the pilot show. Good morning, Rob. How are you?
Morning. Doing well. Thank you.
Well, welcome, first of all, to the DRC Talk of Connecticut radio studios. I know this is your pilot, your debut. So first and foremost, welcome to the station, and just quickly give us a little overview about yourself, and maybe the purpose of this show. Maybe a little bit about your background first.
Sure. So I'm Robert Weinberg. I'm a branch manager with Benchmark Mortgage. I've been in the mortgage industry for almost 20 years now. So definitely, a lot of experience through good and bad markets. But, with that being said, really, first to touch on this show and what we're going to be talking about is home loans, mortgages. It sounds boring, I know it does, but we're going to take a little bit of a different spin on this. Whether you're buying your first home or looking to buy your first home, whether you're a real estate investor, you have multiple properties or are looking to invest in multiple properties, or you're someone that just owns a house or two and wants to better your financial situation by refinancing, changing your mortgage configuration, and that sort of thing.
I don't know if it's a boring topic. I guess any topic can be made boring. Any topic can be made exciting. But I'll tell you this, Rob, it's an important show. And I'll tell you the reason why. Anytime there is an occurrence that someone has never experienced before, and, whether it's your first time doing whatever, we need to gain as much knowledge. Our knowledge is ammunition. It's a protectant to the more. It's power. They say knowledge is power, and this is something in which someone will have never done. I should say in their life. Buying a home. So, while it could be helping somebody in the next couple of months going through a process that they've never gone through before. A couple of months from now, there's always new people jumping on the train going, okay, well, 2 months ago, I never thought I'd be in that position, but now I'm in the position to be buying a house or a piece of property for the first time. So it's interesting that you say that. What type of guests do you see, this show having? What can the listener really get out of this show?
Well, as far as the guests go, we will definitely be talking to, interviewing, and collaborating with the top real estate professionals in the state of Connecticut. Yeah. I'm talking about real estate agents, home inspectors, home appraisers, real estate attorneys, financial advisors that understand how, a mortgage and a buying of a home can fit into a financial plan. Mm-hmm. My approach has been different from most mortgage advisors maybe you've heard of or spoken to, because I was like anyone else when I started. I thought a mortgage is just a monthly payment. You want to get it as low as you can. You don't really want to deal with it. It's a necessary evil if you want to buy a home. But what I found over the years, and now I've worked with over 1,500 clients in my career, and everyone's got a different take. And when I looked at especially my more affluent clients and, multimillionaire type of people and how they manage their mortgage, how they deal with their real estate and their finances versus the person starting out or the person that's naive, doesn't know much, it's night and day. So I was able to start looking at the differences and taking them from the more well-off clients and applying it to the average everyday Joe. And that's the big thing is it's not just a monthly payment. A mortgage can be the cornerstone of your entire financial plan, much like the 401k is the cornerstone of most people's retirement. But when people just say, oh, that's a monthly payment, I want it low, or I don't want it at all, they're missing the boat. And that's really what we're going to be discussing on this show is bringing these new age strategies, a more modern approach to mortgages.
Well, I'm just curious, though, why did you decide it was time to create a show like this?
So I deal with, so many clients all the time, and I get the same questions over and over. So it actually goes back to a couple of years ago when I started, getting really aggressive with my social media. And the reason I did that is the same reason that I'm doing this show, which is get the same questions over and over. There's a lot of myths and misinformation out there, and people don't realize it. It's passed down from one person to another. Most people learn about money from their parents or their grandparents, but this is 2021. You know, things are different today than they were 10 years ago, 20 years ago, or back in the 70s or 80s when maybe your parents or grandparents got their properties.
Well, give me an example.
So, you know, back then there were types of mortgages like balloon mortgages where you would pay the mortgage, but at the end of the mortgage term, there would be a huge amount owed. And, you know, your parents would tell you, never take a mortgage. You want to pay this thing off because they're dangerous. Also, just 10 years ago in the state of Connecticut, many mortgages had prepayment penalties where you would get penalized for actually paying your mortgage off. Very, very common. Now, that was outlawed, you know, after the subprime crisis, after the housing crisis. Those are not around anymore, but people still have that scarring that these are bad. You know, you don't want to do this. And it's because of this, they're not around anymore. You can't take the strategy from 10, 15 years ago and apply it to today because there are now more consumer protections than ever in the mortgage process. You would be just unbelievably surprised. And I think it really goes way back to the Great Depression. And in the Great Depression, a lot of people lost their homes. And the reason why they lost their homes was because of the mortgages that they had on them that were dangerous. They were predatory. And people, again, grandparents, great-grandparents of people listening right now were passed down to say, hey, that mortgage is bad because we lost our house, because when we couldn't pay the payment for 2 months, the bank said pay up or we're taking the house. And that's how it went. That got passed down to the parents. The parents passed it down to their kids. The kids passed it down to their kids. And here we are literally 80 years later, and there's still people, many of whom are listening right now, that have been taught pay off your mortgage as quickly as possible. If you can actually not get a mortgage, that's what you want to do. Just don't get it. It's bad.
Right. Well, okay, so get a mortgage, but you're saying don't pay it off as soon as possible.
I'm saying for the majority of people, paying off the mortgage is probably the worst financial mistake you could make. Once you understand, and the strategies we'll be talking about on the different ways to use the mortgage. Most people listening only understand that you use a mortgage to buy a house, and you might change your mortgage around if the rates go lower, okay? And that's it. They don't understand reverse mortgages. They don't understand debt consolidation, how powerful that can be. They don't understand cash out refinancing and actually pulling equity out of your house.
Like a home equity loan.
Similar idea, but we're going to take that 3-4 steps further because it's about taking that equity out and actually building wealth with it. You know, there's a right and wrong way to do it. Much like insurance products, much like other financial products, there's different ways to skin the cat, so to speak. Wow. And once you understand hundreds of ways that you can use a mortgage, it just opens up a Pandora's box of amazingness. Like, it's unbelievable when I will show you some stories of clients that have literally gone from 0 to owning 10 properties in a couple of years, all because they made the right financial moves with their mortgage. And they embraced the mortgage. Instead of saying, I don't want this thing, they took the mortgage, they did it the right way. Then they took another one and reconfigured it and changed it around. And it's like, people go, gosh, I didn't realize it. And before you jump in there, I want to say that a mortgage advisor, and something we'll be discussing, is you need someone to advise you because they don't teach this stuff in school. It's changing literally daily, and you need someone to guide you through this process.
Rob, why don't people know this then? I mean, if the information is out there, why the big secret? Why would people not want to have this information disseminated to everyone?
I think people do want the information. They know there might be a better way, but the banks and credit card companies have the biggest buildings in town for a reason. They're trying to teach you how to manage your money, but they're not teaching you to better your situation. They're teaching you to better them. They're teaching you to make them money and line their pockets.
But you're making money too. I mean,
oh yeah, this is not a charity.
Bills to pay.
I own a mortgage branch with Benchmark Mortgage here locally in Connecticut. So you're not dealing with someone halfway across the country or, God forbid, across the world. You know, I've done well. I've done fine. I'm not doing this for money anymore. It's about knowledge. It's about education. And that's the big difference that you'll find with me versus any other mortgage loan officer or advisor you may have talked to is I am all about the knowledge. You know, knowledge is power. And once people understand this stuff, they can take that into their own hands and have that power to change their situation.
You know, it's funny. You were talking about, how things were in the past, whether it's the 30s, 40s, 50s, whatnot, and how mortgages have changed. and how we've been conditioned, because we've heard it from our parents, but our parents lived in a different era. So when you get a young adult going out there in life, the only advice that they're going to turn to for advice are their parents, right? So, but their parents are giving them antiquated information that may have worked well when you were starting out, and you've just carried that with you all along with that one train of thought. But times have changed, Mom and Dad, and you're not even aware of that. All the more reason to seek someone like you out. For example, there were times when variable mortgages, were the thing to get. Oh yeah, you keep, but the market being so volatile that could realistically, variable rate can increase every month, every year, and so on and so forth. A fixed rate, I would imagine, is the way to go. Do they even have variable rates anymore?
They're around, but they're very, very rare right now. It just doesn't make sense. There's some economics behind it, and I'm not going to bore anyone with inverted yield curve and all these other terms, so we'll put that aside. But there's no incentive now to get an adjustable rate. Years ago, there was an incentive to get an adjustable rate mortgage.
So if I understand this correctly, and please let me know if I'm wrong here. Let's say I contact you and I say, you know what, I'm looking to sell my house and buy a new house. And I want to put, I don't know, let's say $50,000 down. I'm speaking hypothetically here. But you know what I'd like to do? Maybe a year or two from now, I'd like to buy other properties, whether it's for investment properties, whether it's commercial property or whether it's multiple family home. Not right away. Let me enjoy my new mortgage and let the dust settle. But a year, possibly even 2 years, I'd like to do that. How would I be able to do that if I only have the $50,000 equity I put down into my home and whatever payments I've made, which is, as you know, is going to be primarily profit over principal for at least for the
interest.
Interest over principal. You're right. So then, how would I be able to see that dream come true as far as buying other properties, as you just referenced, just a couple of years after buying a home?
So, everyone's situation is different, but using the hypothetical situation that you just gave, if you've got $50,000, who's to say you have to put down all $50,000?
Well, you want to keep your payments low, though, right?
You know what? In the grand scheme of things, with mortgage rates being so low right now, which we'll elaborate on, later and in future shows, $50,000, whether you put down $20,000 or $50,000, you're talking about a small differential in monthly payment. So what we really want to do is look at what's your long-term goal. If you come to me and say, I want to own 3 to 4 properties in the next 5 years. Well, if all you've got is this $50,000 and the first property is a primary home, there's special programs available where you can put down as little as 3 to 5% on that first property. Let's preserve that money, let it grow a little bit, so that the next property you're not starting from square one. So that's the first piece of it, is let's not exhaust all your resources on your first deal. Let's be strategic in how much we're putting down and whatnot. But the other piece of it is the equity. So if you make your money on the buy, meaning you get a good deal on a property that's going to appreciate, if you live in that house for a couple years, we're going to go and look at it in a year or two and say, wait, you bought it for $250. Right now it's worth $300 or $310. There's this built-up equity there. Oh, well, you need another $10,000, $20,000, $30,000 for that next deal. Let's liquidate some of that equity. Let's pull that out. It's not doing anything for you in the home. And that's a huge myth, is that people think, I want to keep all my equity in the house because it's good and it's growing. And that's not true. That's BS. It is, because equity does not have a return. Whether you owe $200,000 on a house or $100,000 on a house, it's going to go up and down no matter what you owe. The mortgage has no implication on the value. And that's a big paradigm shift for people, because they were always taught, well, I was taught to keep my mortgage low or have no mortgage. You're saying, to take the equity out because equity returns zero. If we take that out and we put it in a stock that pays a 5% dividend, we put it in a mutual fund paying 10%, we put it in a piece of real estate, we put it in another investment. Now we can borrow at this really low rate that's favored, by the tax code, by the government, that gives us incentive, and then we can turn around and we can invest that at a higher rate.
You see, Rob, though, you're the guru. You know all this stuff, okay? But the deeper you get into this and you're owning multiple properties, even if it's someone's dream, they may want to, but they don't have the inside information that you have. I mean, so I guess it's not only just educating people on things that they didn't know. I mean, I just learned something right now. Here we are on this debut of this show where, maybe you don't need to put as much money down if you want to have a portfolio of properties, I didn't realize that there's just so little difference of what your monthly mortgage payment would be between putting $25,000 on and doubling it and putting $50,000 down.
You'd be surprised, couple $100 a month. Most people think it's going to be thousands. And it's crazy because I'll sit there and I'll show a client that, hey, your payment's going to be $1,000 a month if you put down the 50, okay? But it's only going to be $1,100 a month if you put down 30. Well, it's like, oh, that's it? Okay, well, yeah, I want to keep my money because once you give it to the mortgage company, that's it. You either have to sell the house or refinance or get a new mortgage in order to take that money out. So, going back to what we were discussing about the plan, every mortgage has to fit in your overall financial plan. It's not just let's buy this house. What do I have to do? What do I have to sign? No, it's where does this fit 3 years from now, 5 years from now? What are your goals financially? Not only with your mortgage, with your retirement, your 401k, with these other pieces. What investments do you have going on? Are you maxing out your retirement? If you're not, the mortgage can help you to do that. Okay. And these are the strategies that we are going to be showing all these amazing callers, all these people that are, here looking for this advice. And it's different than you've heard. It's different than someone else has shown you. It's new age. It's modern. I'm going to say that because it's not your normal status quo. And if you're not someone that's open to new ideas, then this probably isn't the show for you because we're going to be talking about some controversial things here. We're going to be talking about things that are definitely outside of the box, without a doubt, and things that are really going to give people new ideas and just a new approach to something they thought they knew.
Yeah, but that's not necessarily a bad thing, Rob, because it's not a one-size-fits-all. It's different strokes for different folks, right? Folks, you're listening to Mortgage Matters radio show with Rob Weinberg. I'm Gary Byron. Appreciate you checking in on our pilot show. This is a very interesting topic, and it's a topic that I don't think a lot of people really have a lot of knowledge on. You would think that you would just go to the bank and you would, you'd probably start with your local branch, right? I mean, you already have a relationship with them. Talk to their mortgage broker, and then off you go. Or then maybe you say, right, maybe that's the first place you go. You check the Sunday paper and look at the low interest rates and who's got the lowest, which bank is offering the best, lowest rate, and then call them next. But like you said, there's more than one way to skin a cat, and there's other avenues that people should be pursuing. Talk a little bit about, I guess, maybe the types of people who will find value in listening to this show.
Absolutely. So anybody that is a homeowner already, if you already own at least one piece of property, you're going to get a lot of value out of this because we're going to share some ideas and techniques with you that will allow you to turn that property into a financial tool for you instead of just a monthly payment. So homeowners of any type from all over the state of Connecticut, really from anywhere, can get value. The other thing is, if you're a real estate investor, whether you already own multiple properties or you're an up-and-coming real estate investor about to get or trying to get positioned to get your first property, we're going to show you how to build that portfolio and build wealth using real estate, specifically with the mortgage as the cornerstone of this entire process. So the real estate investors out there, we're talking to you. And last but not least would be your first-time home buyers. And there are huge, they're coming out in droves right now, first-time buyers throughout the state of Connecticut, and you're going to get a lot of value out of this because there's a lot of myths, a lot of misconceptions, a lot of things that are passed down. People are talking to their neighbors, they're talking to their coworkers, they're talking to their parents, and they're getting all these different pieces of advice, and a lot of them are conflicting. And buying a home today as a first-time buyer is definitely different than it was 5 years ago, 10 years ago, or 20 years ago, let alone, further back than that. But you need to know what's going on. You need to know what programs are available to help you. You need to know how to be guided to that stage to get you where you want to be. You might have a credit issue. You might have an issue with a down payment. How much do you actually need? You need answers. we're going to give those to you here. We want to provoke the thought so you know that you can get where you want to be, because every real estate investor, every homeowner, everybody starts at zero. You got to be able to take that leap of faith, and we want to give you the confidence to be able to do that.
What does the 2021 housing market even look like right now?
You know, the market in Connecticut for over a decade had been bad. I mean, it was stagnant. Yeah. It was decreasing.
Was it abundance of inventory or no inventory?
I would say there was a good amount of inventory for a while, up until COVID, and we'll go into that in a second here. But I started doing business in Connecticut as a mortgage advisor. Loan consultant was my title at that point, in around 2003, 2004, okay? Connecticut's housing market, like from 2003 through 2006, even up till 07, was very robust. I mean, you would be surprised at how high some of the markets in Connecticut, the prices went. And I'm talking about Waterbury, I'm talking about Danbury, I'm talking about Hartford, okay? Some of these areas that are very affordable now, you go back 15 years, you'd be surprised at what these houses were going for. It was way overinflated, okay? And a lot of people got into trouble because of predatory mortgages, because of bad advice, and it caused these property values to literally plummet from like 2007, 2008 until literally the last 12 months is when it started changing. So we saw the market staying stagnant or going lower slowly but surely for over a decade. And now finally, because of COVID, we've seen a resurgence. We have seen the strongest market in Connecticut for real estate that we've seen since the last subprime crisis and housing crisis.
All right, you speak of COVID. All right, so then COVID is playing, has an impact on everything right now. I talk to people on a daily basis on the morning show, and people are losing their jobs. People are, or they've agreed to stay on at a reduced rate just so they can have some income. People have been furloughed. People have been laid off. What is the mortgage right now? We're talking present day. And I'm also, just to be clear, I'm talking about people who had been in the workforce since the age of 18, 16 even, part-time in high school. And they're finding themselves in a unique situation, a position that they've never been in their life. How does that impact them qualifying for a mortgage?
Obviously, you need income to qualify for a mortgage. So if you have no job or you have too much debt given your income, you're not going to be able to get a mortgage now, okay? That's what it is. What I'm seeing that's actually fueling the fire is, first of all, the more white-collar jobs, people working from home. Mm-hmm. They have a lot more mobility now, so they can move to areas that are maybe a little more rural or further from their job. That's fueling the market because those people do have jobs. They are making good money, and they can work from home. The next piece is people moving to Connecticut from New York, okay? Huge.
What if you've been out of the workforce for... I don't know, somebody's got laid off a year ago. Okay, and you're finally, because things are starting to get a little better. We're getting vaccinations and the numbers aren't too extreme. I'm talking about here in Connecticut. I don't know, let's say this summer, somebody gets a full-time job, pretty decent paying, but they've been out of the workforce. Let's say they got laid off a year ago, okay? How far back is a mortgage company going to look at?
Depending on the loan program, if you've got excellent credit and you're looking at a conventional mortgage, then you may have a situation where you don't even really have to be back for more than one paycheck stub. We can get you qualified right away if you've got a history from before that gap. Okay? For other types of mortgages like FHA and the federal housing type of loans, you may need to be back for 6 months. Again, every situation's different. Loan programs have different guidelines, but it could be as little as immediate. And I've got several people like that right now that are buying and refinancing that just got back on their job in the last 30 to 60 days, and they're right now getting a mortgage.
So they're not going back 5 years or 3 years. I don't know.
You want to have a history. You want to have, everyone knows, underwriters know COVID caused a lot of problems with the economy, with the job market.
Consequently, are they going to be more hesitant then to offer mortgages?
They're a little more conservative when it comes to calculating income. But if you could show that before COVID, you had a job for 2 to 5 years plus, you were out of the workforce because of COVID and now you're back, there's an understanding there. Okay. Obviously, they're not going to use the income you made 5 years ago today. So if you took a pay cut, you're going to have to qualify for a mortgage based on that pay cut. But it's not impossible. And you want to get with that mortgage advisor quickly so you can actually find out what your strategy is going to be, find out what your timeline is going to be. Can you do it right away, or do you need to actually wait that 6 months?
Oh, yeah. See, this is the kind of information that I think there's so much ambiguity around. I could have this conversation with three people, all at different times and I guess get three different answers. Somebody will say, this is the right time to be buying a house. Somebody else say, well, no, this is a buyer's market, or this is a seller's market, and it's like, well, let's cut through the rhetoric and let's talk to someone like you who is unbiased. You want to help the consumer. You want to help the person and cut through, I guess, like I said, the rhetoric and get to the facts. Another reason why this show is just, so important. There's other questions that I have. Sadly, we are just running out of time. We're just going to have to postpone those questions and tag them along to the topic of conversation for next week. But no, this is great. This is a great way to get a pilot show going. You've sparked a lot of interest, I know, with me, and I'm sure a lot with our listeners. Well, hopefully we'll pick some more people up from there. Folks, if you've got a question that you'd like to have answered right on these very airwaves, it's very easy to get your question asked and even answered by our guru here, Rob Weinberg. It's Mortgage Matters Radio Show at gmail.com. It's as simple as that. Send us an email, Mortgage Matters Radio Show at gmail.com. Of course, you can also reach Rob Weinberg himself if you've got a personal question that you'd just like to ask him and maybe not get over the airwaves. And that's easy to get answered as well. Give him a buzz. You can give him a call at 860-413-3938. Once again, 860-413-3938. Incidentally, if you'd like to poke around on their website, I actually advise you to do that first, because you may already have a couple of questions, get them answered, and then you go back on the website and it's like, oh, I wish I had gone. It just spurs other questions. Write down your questions first, go to the website, maybe it provokes a couple of other questions. Write those down as well. Then you can ask him all your questions at once. The website is very easy, robgw.com. www.robgw.com. For Rob Weinberg, I'm Gary Byron. Thank you so much for listening to the Mortgage Matters Radio Show. Until next week, have a good one, everybody. So long.